Die Sprachübertragung beginnt jetzt. Alle Teilnehmer befinden sich im Zuhörermodus.
Sunny good morning from Bonn, dear ladies and gentlemen, and hopefully also a sunny good morning to London, dear Jegor. My name is Michael Bommer, and I would like to welcome you to today's webinar on the European ESG template, the EET. Just some technical information at the beginning. As usual, you will get a copy of the slides of this webinar afterwards, as well as a recording to watch it on demand if ever. And more important, if you have any questions, you might ask them in this GoToWebinar tool right in the upper right corner of your screen. I think that our speaker, Jegor Tokarevich, is very flexible to answer questions also in between. Again, type them in the right corner of your screen, please. Our agenda for the next hour and a half is the following one. After some remarks on our ESG activities, Jegor from our member Substance Over Form will present you his lessons learned on the EET, followed by a Q&A session. Jegor and his team have seen and worked with more than 1,000 EET within the past months and weeks. We want to share their experiences with our members and the wider public, especially in view of the PAI statement that has to be published for the first time by the end of June for the reference period 2022. As just mentioned, I will tell you briefly more about our ESG activities, which are, inter alia, the following ones. So we have a permanent working group on ESG and sustainable finance, with which we prepare BAI's opinions for consultations on all levels, be it JOSCO, European Union, or Germany. It is also a platform for dialogue and exchange of information. Members of this working group formed the nucleus of the PAI Best Practices Roundtables, where we discussed almost every 2 weeks the specific problems for illiquid asset classes like private equity, private debt, real estate, and infrastructure. We offer BAI webinars on ESG topic like this one, and every year we organize a workshop on ESG topics as we have done in the past years, and as we will do next time on 20th November 2023 in Frankfurt. We share informations and inform our members via info mails and newsletters with ESG topics, and also with our newly introduced BAI member portal with up-to-date information and exchange with other members. Let's have a short look to our member portal. You see here a screenshot. If you are logged in, you can see at the left side our various ESG subgroups, such as the taxonomy and the SFDR group, but also the EE group co-headed by Jegor. Be it in this member portal, be it by email, be it here in the webinar, Jegor and I will collect all your comments and critical points on the EET and subsequently send them consolidated to Findatex. So it's quite important also to have your impressions, your points, and your critical points on this topic. Just a bit more advertising before we start. Here's a look at our future events in presence. So we organized the BAI Innovations Day for the 3rd time in September, a BAI Real Asset Symposium for the 1st time in October, and the before mentioned workshop on sustainable finance and ESG, as we did in the past years in November. So today's speaker is Jegor Tokarevich, CEO from Substance Over Form, a risk and reporting service provider focused on risk management and reporting, including ESG reporting for alternative investments and regulated institutional investors such as insurers, pension funds, banks, and asset managers. Jegor is also co-head of the BAI working groups on investor regulations for pension funds, banks, insurers, etc., and sustainable finance and ESG, as well as initiator and moderator of the PAI roundtables that I mentioned before. What he's doing on his job, he teaches also at the University of Oldenburg. Jegor is also a member of the EU-wide Findatex working group developing Solvency II reporting templates. According to this model, also the EET, today's topic has been developed. So here you are, Jegor. I am glad that you share your various experiences with our audience, and I hand over to you now. The screen and the microphone are yours, please.
Okay, thank you very much for the introduction and also the splendid organization as always. Always a pleasure working with you here in various formats. A very warm welcome from my side to all of you. Great to have you here. As Michael mentioned, we're looking forward to not just presenting, but also receiving your questions, answering the questions. So please, anytime you have any question, just enter it in the chat fenster, chat window. So what will happen now is, as a brief intro, we'll share some lessons learned from the last very intense months of the EET reporting. And I think the background of this story is that there are certain large European insurance investors, such as life insurance companies, pension funds, AIFMs, so either third-party AIFMs or maybe even normal fund-of-fund managers, who are subject to SFDR and have to fulfill the so-called Article 4 SFDR requirement. And this means that by the 30th of June, they have the obligation to disclose principal adverse impact KPIs on their website. It is a mandatory requirement, so they obviously try to fulfill it as good as possible. So they would reach out to their target fund managers, to the GPs, and ask them for PAI with via an EET, the European ESG template, the new market standard. And since it is the first year with a lot of questions, with a very dynamic regulation, with a high complexity, we thought it would be a great idea to organize this meeting here to just share some lessons learned and the first experience from our work with over 1,000 funds and hundreds of GPs, where we basically try to collect the EETs, received feedback, engage with them, and we'll show you our key, let's say, lessons learned here. As Michael mentioned before I start, we'll also have we'll also consolidate your feedback from the viewpoint of the alternative investment industry in our BAI working group. So please reach out to us anytime if you have any feedback on the EET. And we'll then consolidate it, review it, and communicate to Findatex, which is responsible for the EET. Right, so what are we going to do today? We'll have three agenda points. So we'll start with the regulatory background, so the theory, and then we'll move on to the perspective of the asset manager or the GP and see why should a GP provide an EET and how, which topics need to be considered. And then when the GP provides or does not provide an EET, the next question will be what happens on the side of the LP, so on the side of the investor, and what does the investor actually do with the EET, and especially how does this investor move to the principal adverse impact statement that they need to disclose by the 30th of June this year. So let us start. And I think this chart here shows the process in a nutshell. So as you can see, the EET is an industry standard. It is for free. You can download it on the website, and it's maintained by the European Working Group Findatex. And the scope, the goal of it is to create data points for regulatory ESG data in order to be able to serve the European LP and their requirements. So the idea is quite simple, as with any other standard. You have here 3 target funds, as you can see, and LPs rather have not 3 target funds, but usually they will have hundreds of target funds. And the idea is that they get all the data they require via those EETs, which enables them to aggregate those data, to validate it, to engage with the GPs, and then use it for different purposes, such as website disclosures, the PAI statement we mentioned, which is now due in 1 month, but also designing their own impact, I would call it, products, which definitely some people would argue about if it's impact or not, but in any case, Article 8 or 9 SFDR products, or green products, let's call them, and also for their internal ESG risk management, which is a separate level of requirements. So in our presentation, since ESG is a very big topic, our main focus will be the PAI and the website disclosure, which is due by the 30th of June, as we mentioned before. So before we move on, the first question is, which kind of requirements does a European LP actually have? And there are many requirements, and we try to summarize them in a simple way. And I think that obviously the key requirement is the SFDR, the disclosure regulation, where we have the Article 4 requiring SFDR companies with over 500 employees to disclose the PAIs, so PAIs, let's call it, on their website. In our case, this should be 23, by the way, I can see. So we should disclose it by the 30th of June 23 on their website. This is the first official level 2 template that has to be disclosed. This they have to do for their entire balance sheet. So if an insurance company has 50 billion assets under management, they have to do it for their direct investments, for their target funds, for their Spezialfonds, and so on and so forth. At the same time, LPs may design their own products. So those products will also have additional requirements that may require PAI. On the one hand side, those are Article 7 requirements where a product, so let's say a fund of fund, has to disclose PAI. On the other hand side, those can be Article 8 and 9 SFDR products where PAI can be also an important requirement of the pre-contractual but also periodic reports. As we said today, the main focus is on the PIAS, so we're not looking on the product level here, we're especially looking at the LP and their requirement to have PAI. Investors also have to do ESG risk management, where they just have to identify and assess ESG-related risks. Especially in the retail space, they may want to sell their products to the retail market, where they would be subject to MiFID and IDD. So in general, they would have to ask the investor, the retail investor, if they have any sustainability preferences. So in order to be able to do that, they would also require data on sustainable investments, taxonomy, and the consideration of PAI. And then you have a specific requirement for so-called NFRD investors, which are large public interest entities mostly. And those investors have an additional requirement to disclose taxonomy eligibility, that was the requirement this year, but also the taxonomy alignment, which they have to disclose for this year in the next year. So here you have additional taxonomy-related requirements for specific NFRD investors. So we can see there are many different requirements. So the question is now, how do we get the data in order to fulfill those requirements? And one of the answers is the EET. So what's happened was that the European industry came together and said, how can we define a template that can cover some or many, actually, not all, but many of those requirements in a standardized way? And I can see that Michael showed up, so I assume there is a question there.
Yes, exactly. So you've just mentioned that one of the answer is the EET. So the question that I received is, how far are we into EET becoming the standard? Or asked differently, how many other forms of PAI requests are you seeing? Just for background information, this is a non-EU private asset manager that asked this question. Thank you.
We have to say that the EET is a rather fresh and new market standard, because the PAI disclosure started, so in this format, started happening this year. So we're basically 5 months old, if you want, in the regulatory space here. So we're, let's say, in the kindergarten right now. Therefore, we are at the very beginning. However, if you look at different standards, I would say that there is not really a lot of competition for the EET, because there is no I'm not familiar of any other format or standard which includes, first of all PAI, but then also all coverage and eligibility ratios that we'll discuss in detail today in a machine-readable format. Plus also administered by, let's say, a working group like FinDirect, which also developed many other European templates like the tripartite template, EMT, and so on. So my personal perception is, since there are no real alternatives, to be honest, it will be a standard, and we see now an increasing amount of LPs requesting the data via an EET. As I said, my personal opinion, we'll see how it will develop. Maybe as a brief, let's say, anecdote. So, you know, Solvency II, the Solvency II template, so for insurance companies, is called the TPT. It's basically, you know, a similar template, but for a different purpose. And when Solvency II came into force in 2016, it was exactly the same. So nobody really, you know, reacted to it. Nobody knew what it is. It was new. It was complicated. Nobody did anything. If you look now, 2023, it is basically a market standard. You have it inside letters. There is no alternative for this. Many GPs have been providing it for many years. There are standardized tools aggregating it, validating its processes, and so on. So my personal perception is that exactly the same will happen to the EET as it happened to other templates that we know in the regulatory space as well. Michael, I've seen you again.
Well, it's just a remark from one of from the audience that also VM data is purely relying on FinDirect EET, so it's just reinforcing what you say. And then there is another question. So that someone has solely seen EET requests for private market investments from German investor. What is the rest of the EU not buying into the template? So German, not German.
Right. So German, non-German, it is all EU investors will have the same requirement, or not will, they do have the same requirement. Again, not surprising, what we had in Solvency II was exactly the same question a couple of years ago. The reason is that the investors you received it from may have started implementing it rather sooner, or not even sooner, but on time, I would say, as opposed to other investors. Again, the forecast here is it's very likely that the same will happen to non-German investors as well, because they have exactly the same regulation and exactly the same, let's say, structure of processes as the others. So it is not a German topic. It is an EU-wide topic, which is also relevant for non-EU GPs, because if non-EU GPs want to attract EU LPs, they will need the EET.
So there is a question that you will answer probably in the second part of your agenda. So what kind of LPs are in scope of Article 4 of SFDR?
In scope of Article 4 SFDR, we have so-called financial market participants and financial advisors. Only question is, how do I get back here? Because I can go forward, 1 second. There we go. So I would say the major investors are life insurance companies, pension funds, so IRBs, they're called IRBs, AFIMs, UCITS, MENCOs, and certain financial advisors. Banks are not really in scope unless they do portfolio management. So the majority of demand we see from life insurance companies, pensions, and fund of funds, fund GPs, as well as third-party AFIMs.
Okay, thank you. Then one last question for a moment. Any visualization of how does a PAI reporting looks like? Is it another master Excel? Can LPs fulfill this requirement by sending just an EET?
We'll see it in a second. Yes, we'll see it in a second how it looks like. Thanks for this. So thanks a lot for the question. So we see we're talking here about practice-related things and relevant things, because it seems that it all comes from the recent interaction between GPs and LPs. So thanks a lot. Please keep asking in the due course. So now let's move on. Let's have a look at. So I've just shown you the requirements that we have, and as I said before, those requirements have to be fulfilled with data. So now we need data. So which data do we need to fulfill those requirements? And as you see here, for the principal adverse impact statement, you need three major data points. One is the PAI value, another one is the PAI coverage ratio, and the third one is the PAI eligibility ratio. Those are three very major data points that we'll discuss in detail today with examples. If you provide those three values for the relevant PAIs, then the investor will be able to use them for their principal adverse impact statements. Then you can see that, so this is our focus of the presentation today. Then you may have also other data points for other purposes. Let's say for Article 8.9 SFDR investments, you may need percentages of sustainable investments, taxonomy alignment, certain manager fund information. For risk management, you can need all various types of things. MiFID IDD, you need PAI consideration. This is, by the way, something you need for MiFID and IDD. You do not need this for principal adverse impact statements. So when we collect data for principal adverse impact statements, we don't care if you consider PAI or not. It doesn't matter because it doesn't come from the SFDR. It comes from MiFID and IDD. And then last but not least, the NFRD, I mentioned it. So specific NFRD investors, so large public interest entities, they need taxonomy data. And the specific of those investors is that they can only rely on the taxonomy data, which is official, which means it's provided by NFRD entities. Otherwise, they can't use it in their mandatory report. And this is something, for instance, what is not covered in the EET. So as you can see here, the European ESG template is currently covering those requirements here for the SFDR, risk management, MiFID II, and IDD. However, if you have an NFRD investor, probably you will not be able to cover their request by the EET. You will need to provide the data in a different format. So either in your own format or in their own format, but there is no market standard for this. And maybe the EET at some point will be extended to this. I haven't heard about it yet. Okay, so that much for this. So the EET includes many data points. However, if we are looking at the principal adverse impact statement, our three main data points are the PAI value, the coverage ratio, and the eligibility ratio. And that is exactly what we're going to focus on today, because there are a lot of questions around those aspects. So now, principal adverse impact statement, for you to understand how does it look like. So this is now the year 2022. And what's happened during this year? During this year, what's happened is that you would invest, you would have a different portfolio allocation as an LP. Maybe you acquired something in Q3, maybe you sold something in Q4, and so on. So you have a dynamic portfolio allocation here, and the portfolio allocations, your portfolio may cause a principal adverse impact. So in 2022, what you basically did is you invested and caused a principal adverse impact. And now in 2023, what we would like to do is we would like to disclose this principal adverse impact and measure it. This is the whole goal of the whole principal adverse impact statement. So how does it happen? So first of all, what will happen is that the PAI, the principal adverse impact KPIs, will be collected from all investments by LPs in different ways, especially via European ESG templates or the EETs. So the way to collect this data from a target fund, let's say, will be predominantly the EET. The way to collect it from a direct investment will not be an EET, it will be something different, it will be some other template that LPs will use. So this is what happens. And I think a key misunderstanding that we've seen a lot was also here that there is a requirement to do it based on at least 4 observations. So the question was, do I need EETs on a quarterly basis? Do I need to calculate PAI data on a quarterly basis? And I think the supervisory authorities, but also the industry, agreed that it's not the case. So the PAI data will be usually collected on an annual basis. So you would collect the Scope 1 emissions, for example, Scope 1 GHG emissions for the whole year of a portfolio company or of the fund. However, if you would like to know how much of those emissions throughout the year were actually attributed to your portfolio, then you will also need accounting data based on 4 quarterly NAVs. So what you would actually do is you would take annual PAI data and combine them with quarterly accounting data and aggregate them. So this is, I think, is a common also misperception maybe, that somebody thinks you need to calculate PAI on the quarterly basis. This is not the case. Usually they're calculated on an annual basis, and then in the aggregation, quarterly NAVs are used for calculating averages and so on. And another important point is the best effort basis, because you know, there is this assumption that there are the liquid market is so much better than the illiquid market in terms of the coverage of ESG data. We were surprised recently by looking into certain liquid portfolios provided by a very large ESG data provider. We realized that many PAIs also have very low coverage ratios even in the liquid market. So it is very clear that it's not just the illiquid market which is obviously struggling a little bit with the coverage, but also the liquid market has a lot of low coverage KPIs in many cases. So this is completely clear. So there is no perfect data in no asset class, and therefore PAI have to be calculated on a best effort basis, which means that the assumption of the regulator is already that you will have a data gap. And then the question will be, how do you treat this data gap? Do you make estimates? Do you disclose the data gap? What do you do? So we'll look into it as well. So this is essentially the PAI statement process. And as you can imagine, many LPs still have 1 month's time left. So they are now they're in the final stage of collecting and aggregating the PAI data in order to prepare the principal adverse impact statement. What does it mean? It means that they need the data, obviously, before the deadline of the 30th of June. Because imagine that a big insurance company with 100 billion asset under management need to disclose something on the 30th of June. And if you come as a GP and give them something on the 30th of June, then it's obviously too late, because they'll not have no time to validate, aggregate, look into it, and so on. So therefore, the typical deadline for the EET will be before the date. And this is where, if you, as a GP, try to provide something by the 30th of June, it is too late. So you need to do it significantly earlier than that if you still want it to be considered in the PAI statement. So how does it work? Usually we would see deadlines from our LP clients that would be between, let's say, the 31st of March, sometimes even earlier, but I would say the good ones start with the 31st of March, and then maybe ending in somewhere mid, even end of May, especially for the first year. So we think that if you are able to provide an EET as a GP by, let's say, the 31st of March, you'll be quite good actually for illiquid products. And I see Michael has probably a question regarding the timeline, because we get this a lot.
Exactly. So what is the experience if certain investments were no longer in the portfolio by the end of 2022, but for example, until QA 2022? Does this need to be taken into account for the coverage?
Until Q what, sorry? Until Q?
Q1 2022.
It
So
has to
only
be,
for the
of
first
course, yeah.
time.
If you had an investment in your portfolio from the 1st of January, in this PAI reference period, it has to be taken into account in the calculation of PAI, also in the coverage and eligibility ratios, of course. So you need to consider all assets you had on the balance sheet during this period. Absolutely.
Thank you.
No worries. All right, very good question. So this is, by the way, is also different to the other reporting we do, because usually you just take a balance sheet of 1 quarter, and then you basically calculate everything based on this. Here you take an aggregated balance sheet from 4 quarters, and then you start calculating different values and perform aggregation. So that makes it a bit different to, let's say, other reports like TPTs, VAGs, CRRs, and so on. Okay, so let's move on. Let's move on and see. Now I'll answer the question that somebody asked earlier, namely, how will it look like? And this is how the principal adverse impact statement will look like, that you'll find on websites in 1 month's time at the very latest, if the LPs are on time. So what will you see here? You'll see here, for example, scope 1 GHG emissions. So what will you get there in the year end? They may write 10 tons CO2. Now imagine that if you provide this information to the market that you had 10 tons CO2, it will be probably also of interest for the investor to know, for your client or for the stakeholder who reads it, to know, did you calculate it for your total portfolio, or did you maybe have a data gap and calculate it only for 5% of your portfolio? Because it is, of course, a big difference if you tell that 10 tons CO2 were only for 5% and the other 95% you don't know, or if you say that 10 tons you calculated for 100% of your portfolio. And this is exactly where the coverage and the eligibility concept comes into place, because it shows you the data gap. It shows you which amount of assets should have reported and which amount of assets did actually report. So this is something what many of LPs will also report here in the explanation. So they will, for example, say, we had 10 tons CO2. However, we only calculated it for 10% of the portfolio. We had a data gap of 20%, for example. So then the stakeholder reviewing it knows, okay, so the 10 tons do not just refer to the whole balance sheet, but they refer only to the part of the balance sheet that is known, but there is also a big black box, and then they will know, okay, so this black box probably will also issue something. So that's a way of disclosing, let's say, a data gap that we see from different LPs, which would assume to happen going forward on the websites. Another option is that some other LPs, they will estimate the data. So they'll not enter 10 here, they'll enter maybe 30 tons CO2 because they estimated 20. In this case, they'll explain probably that 10s they got directly from the companies, and the other 20 they estimated with some method. So they made some proxies, maybe they used either other data or did something else, or made a conservative estimate or whatever. So that's a very important consideration, this topic of the data gap. So this is a very data gap is dominating, the dominating topic in the PAI reporting and the EET, and therefore our goal here is to close this data gap as much as possible and also to identify as much as possible. That is what we're going to talk about now. So, Michael.
Yes, just one question. So what's your take on estimations closing existing data gaps for the future? Will the regulator allow estimation in the future?
Nobody knows what the regulator allows in the future apart from the regulator, and probably even the regulator doesn't know it. Because the whole environment is very dynamic. I think what was a bit eye-opening for me was actually during your conference, Michael, during the BAI conference this year, BAI AIC, where I spoke to an auditor and I said, what is your take exactly? So I basically had the same question to the auditor, and the auditor said, listen, you know, the SFDR is a disclosure regulation. So it's not a regulation about how to calculate PAI, or, you know, it's not a method, it's not about methods or is an estimate, is it a reasonable estimate? It's not. It's about you do something and you disclose it. So if you take this as a guidance, then it means that whatever you do, you need to disclose exactly in this way, so that you don't have any misperception of your data. So if you say you have 10 tons CO2, you need to say for which proportion you calculated, then you're consistent. If you say you don't have 10 but 30, but 20 you estimated, then you need to say 20 I estimated. And probably both, at least under current regime, should be sufficient, or should be, or maybe okay, based on how I understand the regulation, because it's the spirit of the disclosure. So you do something and you disclose it consistently. As an opposite to, you do something but you disclose it differently, which then creates a mismatch, and then you may mislead the investor. So this is the whole point of it.
Okay, thank you very much. Then there are several questions regarding the difference between coverage and eligibility, and also their definitions. I think that will follow on the next few slides. Then there is a question, do the PAIs also have to consider the entity level of the GP or only the product level of the GP? Do the PAIs?
It depends on...
Yeah.
Sorry, we had interrupted you, so...
No, I just wanted to recapitulate. So do the PAIs also have to consider the entity level of the GP or only the product level of the GP?
Yeah, it depends on in which context. If you have the requirement of Article 4, it has to be the entity level, but the entity level means all. So let's say you're an insurance company, so it doesn't mean that, you know, the PAI you produce from your internal employees, but it means the PAI produced by all your assets. So if you're an insurance company with 50 billion assets under management, all your assets in which you're invested, so your real estate, your private equity fund, your German Spezialfonds, your UCITS, and so on, all of them have to be considered. So it's basically the sum of product level PAIs, if you want, that you need to disclose. So entity equals sum of product, let's say. If you have the Article 7 requirement, this is a specific product level requirement. So it depends on which requirement we're talking about. But in any case, you need to have the, if you want to do the entity level PAI, you need to get the product level PAI first. This is the consequence.
I think the following question will also be answered during the web. So how will the data need to be aggregated for a fund of fund? For example, will the tons of CO2 be a simple sum of each ton of CO2 of the underlying funds, or do we need to attribute the tons of CO2 per ownership or percent of NAV?
Great question. Thank you very much for this. This is a very I can see that our colleagues are following very closely because they're asking the questions exactly at the right time and on the right slide. So thanks for that. So if you're a fund of fund, or also if you're an insurance company, you need to calculate your share of the CO2 ton. So, and you have two topics. One is, imagine you invest into a target fund and you invest 10, but the target fund has an NAV of 100. So of course, the amount of tons of CO2 that are attributed to you are 10%, because you didn't invest into the whole CO2 that was caused by the target fund. Another question is, and this is why you need those 4 quarterly observations, is maybe you bought this target fund in Q4. So it means you didn't have it on the balance sheet the whole time. You had it only for 1 quarter. So the 10% that we are talking about are not 10% anymore. They're actually 2.5%. And that's why you have the attribution on 2 levels. One is on the amount, so on your percentage amount, what is attributable, what is your share, and the other one over time, why you need 4 observations. That's the whole point of this 4 observations and scaling. Yeah, great question. Thanks for this.
Great question, great answer. So the next one, probably the last one for the moment. For the comparison next year, if your data coverage is increased, you show a higher PAI. Does it not give a wrong perception of wrong PAI evolution? How do we cope with that?
Well, you can obviously, you have an explanation column, and you can say that the PAI increased based on a higher coverage. So because actually it's a good thing, because it means the data gap is closed.
Okay. Then the very last, given I'm invested in the same asset via 2 different funds, one equity and one debt fund, is there a danger of double counting, for example, for CO2 emissions?
No, because if you invest into the same asset, let's say 50-50, then the first fund, because we said we're going to do it pro rata, will have 50 out of 100 pro rata, and the second one will also have 50 out of 100 pro rata. So in total, you'll have 100, and there's no double counting. And that's exactly the point where you need to do it on a pro rata basis so that you avoid overlaps. Otherwise, you would have double counting. That's exactly the reason of doing it on a pro rata basis.
Then there are even though some more questions. So will the data points, CO2, for example, needed to be audited by a third party, or will it needed to follow certain ESG reporting standard?
So the calculation of CO2, especially now provided by the, to my knowledge, provided by the GPs, is on a completely voluntary basis to the LP. So when an LP comes and says, I would like to have an EET from you, you provide something on a best effort basis, as we said before. When the LP then discloses it on the website in the PAI statement, what will be disclosed, what will be audited, again, based on my understanding, is how the disclosure requirement is fulfilled, not how the calculation of the CO2 emissions is fulfilled. So we are in the disclosure regulation. We're not in the CO2 calculation methodology regulation. And therefore, that's exactly what I mentioned before. It's important to disclose what you did and focus on the disclosure aspect. If certain methodological requirements arise later, that they say the data you need has to be audited or be calculated in a certain way, that's for the future. And my personal my personal expectation is yes, it will happen definitely for certain important KPIs. But for now, we're talking about the disclosure actually. So you need to, what will be audited is, do you disclose what you do? So what you shouldn't write, for instance, is like, let's say you estimate everything, but then you say that, you know, it's all real data, for instance. This would be a wrong disclosure because it doesn't reflect the reality.
So, Jegor, how is your mood? Do you want to pick up some more questions or rather continue for the moment?
My mood is very good, but I think I would suggest to move on to the from, let's say, this different questions on this. I would now, because I would like to focus now in the next minutes on the eligibility and coverage ratio, because this is something which is which first of all is not exactly defined, unfortunately, in the EET. So there is a bit of might be a bit of misunderstandings there. But second, it's something which is extremely important, and that's why we need to look into it in detail. We receive a lot of questions based on this, and those questions are all the same. So before we do that, first of all, maybe quick summary of various data points that we have. So as you know, PAIs have every asset that you have can be assigned to at least, not to at least, but to exactly one category. So you have an asset, a direct asset, let's say it's real estate, you can either assign it to the investee company category, to the real estate, or to the supranational, or to none. So for example, if you have other assets like some receivables, you would not assign them anywhere. Or if you have cash at bank, usually, our understanding, it would not be assigned anywhere, or derivatives, like FX forwards, for instance. But if you have, let's say, an infrastructure SPV, or if you have a private equity company, like some fintech, for instance, or private debt company, it would be an investee company. If you have a real asset, if you have a real asset which is real estate, it would be assigned here, and usually government bonds and other sovereign supranationals would be assigned here. So this is what you do, and then there are different ways of counting the amount of PAIs. What we did here is we didn't count the amount of PAIs because they're sometimes a bit confusing in this template, but we counted the amount of data points in the EET. And you'll see that for investee companies, you have 24 environmental and 5 social mandatory PAIs and 20 and 18 additional ones. So in total, we have 67 investee company PAIs, which I believe is a lot. But this is the regulation, it's not the EET. So it has nothing to do with the EET, it is how the regulation is. Then we have the real estate, which is significantly easier because you only have 2 mandatory ones and 9 additional ones, so 11 in total. And then you have sovereign supranationals, probably not very relevant here for us in this round, where we have 3 mandatory and 8 additional ones, so 11 in total. So 67, 11, 11. And now those, I'm talking about the PAI values. However, each of them will also have a coverage and an eligibility ratio. So those numbers will now be actually multiplied by 3, because for each of them you also have a coverage ratio, and for each of them you'll also have an eligibility ratio. And that is why the template is rather long, because you have like around one third of the EET template are PAIs with coverage ratios, eligibility ratios, and PAI values. Okay, so now we've been talking about eligibility coverage ratios almost on every slide, and we also receive questions in. So what is it? So now I'll show you what we as substance over form understand under it, and also what we sort of agree with many LPs and GPs. However, we also see other views in the market, and everything is fine. So as long as you know what you're calculating, there is, I guess, no right or wrong here. So let me show you our view on that. So the eligibility ratio, and here are basically 2 examples. So because we also want to see examples how it looks like in an EET. So those here are typical fields in the EET, and I picked a couple of fields from the investee company, real estate, and supranational. So imagine you have a private equity, a private debt, or an infrastructure fund. Then they would be covered in the investee company section of the PAIs. And we would expect that there are no real estate PAIs or no supranational PAIs. So what would it mean? It would mean that, for example, this mandatory PAI here, GHG emissions, would provide a value, coverage ratio, and an eligibility ratio. What would it mean? It would mean that this 10 means that for the year 2022, the product was responsible for 10 tons CO2 equivalent. And now the coverage in the eligibility ratio will educate us about the data gap. So the eligibility ratio says that 0.8, which means 80%, were actually eligible to report this number. So it means 80% are investee companies. So there are 80% in the portfolio over 4 quarters that are supposed to report. However, and now this is the coverage, only 40% of all assets did report. So now we know that those 10 tons CO2 equivalents were generated by 40% of the assets, but 80% should have reported, which means that I have a data gap of 40%. So I know that for 40% I did report, and for additional 40 I should have reported, but I haven't. And that's exactly what this here says. So as you can see here, we normalize everything by total assets. So by the amount of assets, not by the NAV, not by eligible assets, and so there are multiple ways of calculating percentages. So our understanding is that you have to have total assets in the denominator. Why? Reason number one is it's our understanding of the EET specifications. Reason number two is if you look at the consultation of the recent consultation of the PAI from April, they also highlight that all investments should be in the denominator for PAI calculations, and all investments include cash, other assets, and so on. And last but not least, it is the only way to meaningfully aggregate on the LP level, because otherwise, if you receive 5%, you don't know what it's based on. So is it based on total assets? Is it based on something else, and so on? So it helps also in the process. So that is a quick story about this. We're gonna have a look at it in more detail in a second, but that's what it would look like. So now we still need to provide the data on real estate and supranationals, even if we do not have them. So what would we do? We would say that real estate PAI, so that here is some real estate PAI, you see energy and efficient real estate. The eligibility is 0 because I have 0% real estate in the portfolio, and the coverage is also 0 because I have 0% assets reporting it. And the value is empty. It's empty, it's not 0. Why is it empty? Because there is no value. So if there is no value, it should be empty. The same as supranationals. I have 0% assets eligible for supranational. I have 0% assets which are reporting supranationals, and the value is empty because there is no value. And that's an example of how PE, PD, or infra EET could look like across different PAIs. Michael, over to you.
There is such a question regarding this example for investee companies. So the 10 tons CO2 in the slide, does that refer to 100% of the GHG emissions of the underlying assets, or just a pro rata share of the ownership of the fund in which the LP have invested?
Depends on which level you do this. So if you're a fund and you create the EET on the fund level, it is the 10 tons that your fund cost. So you will see what is your pro rata tons in CO2 in your target assets. So let's say you have 50 assets. So you would calculate how much CO2 were cost by your fund over 4 quarters. Then you aggregate it, and then 10 would be what your fund cost. And the same will then happen on every level. So on the level of LP, for instance.
And what would be an example for non-eligible asset, or more, why would an asset be considered ineligible?
So a non-eligible asset depends always on the category. So a real estate is not eligible for investee company. An investee company is not eligible for real estate, right? So it depends on the group. It's eligible for the specific group. So for the specific PAI group, right? So should it be considered as an investee company? If yes, you're eligible. If no, you're not eligible. So for example, cash. Is cash considered to be an investee company? No. Is cash considered to be in real estate? No. Is cash considered to be supranational? No. So cash is not eligible anywhere. Is an investee company considered to be an investee company? Yes. So it's eligible. Is an investee company considered to be real estate? No. So it's not eligible for real estate. So it always depends on the particular PAI group we're talking about.
Okay. Then what criteria are used to define eligible assets? For example, does every investment have to report a GHG emission?
So the first thing you do is you classify every single item on the balance sheet as one of those categories. And then if you have an asset that is an investee company, for instance, it has to calculate those PAIs. Yes, and we hear this question a lot, especially from renewables managers who say, but for me, it's not eligible based on their definition. But the thing is, the SFDR does not distinguish in the investee companies between SPVs and non-SPVs. The SFDR only understands investee companies, real estate, and sovereigns. And it says, if you're an investee company, you have to calculate this here. You have to calculate those values.
Okay, then a participant received feedback that the coverage ratio cannot be higher than the eligibility ratio. But if I have 80% investments in a fund, 20%, let's say, cash, my eligibility ratio would be 0.8. But if 100% of the eligible assets report data, then the coverage is 100%. Or is coverage understood on the total portfolio?
Question. I assume the participant may have received it from us, because that's a very typical feedback we are giving to participants. The reason is it depends on how you define it and what you have in the denominator. So if you normalize everything by total assets, then of course you can't report PAI for more assets they should report. So imagine you have to report the CO2 emissions for 80% of investee companies. You can't report it for 90. So this is the whole point. So if you normalize coverage and eligibility by the total assets, then coverage can be greater than the eligibility. It depends on how you calculate it, how you define it.
Is there any eligible asset checklist for each asset class?
The eligible asset checklist is it an investee company? Yes or no? Is it a real estate? Yes or no? Is it a sovereign? Yes or no? If yes, eligible. If no, not eligible.
And the coverage ratio does not distinguish between estimated and real actual values? That's a question.
Right. Not in the EET. Yeah, in the EET you don't have the data point where you can distinguish between an estimated or not. However, to be honest, estimate is a very complicated question, because what is an estimate? So if an asset manager goes to an onshore wind farm and receives the data from this onshore wind farm provided by the asset manager, would you say it's estimated or it's not estimated? Well, because the asset manager made some assumptions and this wind farm is not supposed to disclose something, under NFRD, you would say it's an estimated one, because didn't come from an audited NFRD statement, for example. So where does an estimate begins and where does it end? Is an estimate only if you take it from a peer group, or is an estimate already if you start estimating something by yourself? So I think it's a legal question what an estimate is. And in the alternative investment concept, I think the majority can be considered as to be estimated, regardless of how you get it. So even if your SPV or if your real estate provides you with something, it doesn't mean that it's not estimated. It could, in our view, could also be considered estimated, just with a better quality maybe than if you get it from a peer group or something, or scale something and so on.
Okay, thank you. Then one last for the moment. If you can self-define the denominator, then doesn't that still make the data incomparable at aggregate level?
Absolutely. This is why we're trying to, we're providing the feedback to FinDatex to provide an explicit definition of the coverage and eligibility ratio, which is 100% clear. However, what is important is that you explain to your LP, and also the LP understands from the GP what is used there, so they can calculate correctly. At the end of the day, percentages are easy to calculate. You divide one number by another one, so it's arithmetics. It's not even mathematics, right? But it's very important to know what is divided by what, so that you can work with it correctly. Right. So now let's move on to a real estate equity fund or a real estate debt fund. And this will look it will look like this. So the investee company PAIs will report no values, zero eligibility, zero coverage ratios. Supranational will report no values, no coverage, no eligibility, but then the real estate PAI will report something. And in this case, you can see that we have 95% of real estate in the portfolio, 75% had data on energy inefficiency, and the value was 0. So this 0 doesn't mean I don't know what it is. This 0 means 0% of all my assets are energy inefficient. So in other words, those 75% are energy efficient, right? So that's essentially what the interpretation is. And now let's move on to the calculation. So here is exactly because we have a lot of questions around this. So what do we do here? We have a fund here. It has 2 private debt instruments, 1 real estate asset, cash, and some other assets and liabilities. So as I said before, we use the total assets in the denominator, so all positive values. So those will go into the denominator. And what will happen then is, in order to calculate the eligibility ratio for different PAI groups, what you need to do is you need to see if the asset is eligible or not. So we can see that private debt is eligible for investee company. Real estate, cash, other assets, no. So what will you do? You will take those 2 values, 300, and divide them by 360. So you know 83% are eligible for investee companies. So we know that 83% are basically investee companies. Then for real estate, private debt here is not eligible because it's investee company. It's not real estate. But the real estate with 50 is eligible, and the other things here are no. So what do? We take 50 by 360. We know that 14% are eligible. And supranationals, we have no supranationals, so 0. So now I know that 83% are investee companies, around 14 are real estate, 0 are supranational, and the rest is surely cash and other assets. So this is the eligibility. So it shows me basically the portfolio allocation. And the good thing about this is that it has it requires no ESG data. So I don't need any ESG data. I don't need any scope 1 emissions, gender pay gap ratios. I need nothing to calculate this. I just need a balance sheet. I need to have a balance sheet and just assign it to PAI categories. On the next slide, the topic of coverage. So now we know in the eligibility for which percentage we should calculate something, and now I want to know for which percentage have we actually did calculate something. So what is the percentage which actually did report something? And this helps us estimating the data gap, because I see here the GHG emissions KPI was only reported by this instrument. Both gender diversity only by this one, and controversial weapons by both. So now for this KPI, the coverage will be this number here, so 100 by 360. So I know that 28% of my portfolio do report on this number. So I know, you remember that I know that 83% should have reported, but I know that only 28% reported. So I can calculate the data gap and then decide if I make an estimate or if I disclose the data gap and what I do with this. So it's very important for the calculation of the data gap. The board gender diversity was provided for the second asset. And you can see that then in this case, it will be 200 divided by 360. So now I know that it's 56% essentially that have a board gender diversity reported, but the other haven't reported anything. And controversial weapons, all investee companies reported. So I have 83% reported. You remember 83% should have reported, so I have no data gap. And that's essentially how we interpret coverage and eligibility, and how we are then able to also aggregate it in a meaningful way and estimate the data gap. Michael.
Yeah, just a question regarding your example regarding private debt instruments. So 100 and 200 values, is that the value reported by the underlying SPV, for instance? Example given, 100% of the GHG emitted by SPV's underlying assets?
In this case, the 10, so 100 and 200 is your NAV, is the NAV that you have in your fund, so your share. And 10 is also the CO2 emissions that you caused with this 100. So those 10 and those 100 have to communicate. So if you invested 100, then the 10 are the one generated by the 100.
Okay, thank you. And that what we will disclose in EET's field assets under management, amount of total assets?
So what what we have in the denominator is the total assets, the GAV. The new field that you have in the EET, I think it's called assets under management or something like at the very end. This is a new field, and I think it's not exactly defined. So this is a bit of a field which is I think many managers are currently not using, and LPs are not using this too a lot. So if you want to calculate the PAIs regardless of this field you have in the EET, which is, as I said, not exactly defined, just use the GAV, so the total assets in the denominator, and then I think you will have consistent results. Right. Okay. So that much about coverage and eligibility. Those are exactly the questions we had. So this is again our interpretation. You also have other interpretations, and hopefully at some point there is going to be clarity how exactly to calculate it. Now, last point in theory is 4 quarterly observations. This is just for your information. I'm not going to go into it in detail. Also between IFAMA and ESA. So ESA provided an example of how to do this. So you can review the methodology of aggregating all 4 quarters in this document. And the problem there is that you would always use the year-end GAV as a basis, but then the industry, you often use the quarterly end GAVs. And the question right now in the industry is, do I always have to use the year-end or not? And what do I need to do with this? So it's a very technical question of aggregation and scaling. And this is something what is definitely also should be reflected in your thoughts about aggregation over 4 quarters. But I'm not going to go into detail here because it would be a bit too much for this webinar. Right, that was the basis. So those were the basics, let's say, of calculations, regulatory background, and so on. Now I would like to show you what usually happens from a GP perspective, from the practice. So the first question a GP will ask is, do I have to provide it or not? To provide or not to provide, like Shakespeare asked to be or not to be. So we have the same question for the EET essentially. Should I provide? And if yes, why? And I think there are 3 main reasons. So one is there is a contractual requirement. And of course, many existing funds don't have a side letter requiring an EET, but we see a trend, especially for the new ones. And if we compare it to, let's say, TPTs from Solvency II, we'll know that in future, probably many side letters will include the EET reporting requirement as well. So what could be the contractual requirement? The contractual requirement could be, you need to provide it in the version 1.11, for example. This is the timeline, so by the 30th of March, and the following fields have to be provided. So this could be a very strong example because then it's your contractual obligation. It is not a regulatory obligation, so your regulatory authorities will not come to you and ask you, why do you have an EET or why do you not have an EET? But it would be a bilateral contractual obligation towards your client, to your LP. Number 2 is you don't have this contractual obligation, but you want to make your client happy, which I guess is not a bad thing, right? Because then you get a bit of more funds from the client and maybe also a higher reputation. So an excellent EET means a happy client or a happier client not necessarily, but a happier client, may help in your fundraising, improve your relationship. And this is, we see, especially in new funds that are in fundraising, we see that GPs are more likely to provide an EET than for existing ones. But also for existing ones, some GPs say, well, I still want to raise a new fund from my LP. And I want to make my LP happy regardless. This is why I will also provide it for my existing fund, let's say. Maybe also, especially now, we heard a lot that there is a lot of competition right now and it's difficult to raise funds. So maybe it's also a competitive advantage, especially now where the data is scarce and the EET reporting is not great right now. And last but not least, it may also be actual operational benefit because right now, if you're a GP and you have 10 LPs, 10 of them may send you 10 templates. And then you have to populate 10 templates, which is 10 times more work than if you populate 1 template and give it to 10 LPs. So one EET for all, could be also a very good benefit for you as well, because it reduces your operational, your operations and your reporting requires your reduced recording capabilities there. So that's essentially our 3, I would say, strong reasons that we see as a motivation for the GP to do it. Now, let's say the GP says, I'll do it. I'm going to do it. how should I do it? And I think before this question will be answered, what we usually receive, so here are a couple of, let's say, quotes from our GPs to whom we reached out on behalf of LPs. And what we usually hear is things like this. We are in Article 6 and only Article 8 or 9 requires an EET. This comes because they read the FinDirect specification. The FinDirect specification says for Article 6, you need only those fields, and for Article 8 and 9, you need other fields, and so on. Or they say, we're not in scope of SFDR. Or they say, we close the fund before the SFDR. Or we don't consider PAI. Or we don't have to publish a PAI statement. So there are many reasons that we receive, and all of them, to be honest, do not really matter for the LP, because the LP still needs to provide, still needs to fulfill their Article 4 requirement. So it is important to understand it's a requirement of the LP. It has nothing to do with the GP requirement. It's an LP requirement. So it doesn't matter for the LP if you are Article 6, SFDR, no SFDR, before, after, and so on. What you do with PAI, the LP still needs it because they need to disclose it. Then then another set of answers we get is we have no ESG data, so we can't provide you with anything. We only have cash and other assets because we're already selling. Also, this is not correct that you can't provide an EET then, because you can at least provide some eligibility ratios, because you require 0 ESG data for this. And maybe also you can provide some easy PAIs, because we'll see that some PAIs probably you even know, even without even proactively collecting them, let's say, as we'll see later. So the reason that I'm an Article 6 SFDR and so on doesn't really matter for the investor, and I can't deliver anything, is also not really a strong argument, because you can always deliver something, and you don't even require ESG data for eligibility ratios. So now let's say we heard about it, now we want to do it. And I think an interesting learning for us was that at the beginning was we would usually reach out to the ESG department here, and once you talk to the ESG department, because they have all the ESG data like fund data, SFDR classifications, considerations, exclusions, but also PAI values. So the values of PAIs, but then they realized very quickly that this data alone doesn't help for the EET, because you also need data from finance, because finance has the quarterly balance sheets and other things like enterprise value, gross asset values, instrument types, and so on. So basically for the EET, you need to have both departments collaborating, and because you need data from both of them. And then what happens is you calculate, aggregate, format the data, and basically not just aggregate and calculate, but you translate it into the EET, because EET has very clear specifications on how it has to be. Michael.
Yeah, thank you. So a question: in practice, do you see GPs offering the EET in fundraising? It is PAI's data aren't available yet, and hence the EET has many empty cells. Do you see GPs offering the EET with pre-contractual info? Also, do you see EETs provided? Provided pre-contractually for funds that do not consider PAIs under Article 7 of SFDR?
The answer is yes. The answer is yes, because again, it has nothing to do with PAI consideration. It has nothing to do with Article 6, 8, 9. And the thing is that even if you do an Article 7, so even if you have to, as a product, provide PAIs, there is no regulatory requirement to provide an EET. So since it's a client's requirement, you should handle it as a client's requirement. So the only question there is, do I want to make my client happy? Yes or no? And if the answer is yes, then you'll provide it regardless. And if the answer is no, you'll not provide it, even if you're in Article 7, you'll provide them with a PAI statement in some PDF, for example, or in some other form. So the key point is client requirement. It's a client requirement, and the client needs PAI via an EET.
Okay. Then a statement. So Article 4 SFDR investors require an EET with PAIs from all funds regardless of their SFDR status. is that opinion or fact? To our understanding of asking multiple legal counsels internally and externally, the EET is just a tool, and the entity level PAI aggregation for asset owners can be done in multiple ways, including with proxy data, for which the EET does not fit. Any thoughts?
Correct. The Article 4 requirement, the fact of the Article 4, based on my understanding, is that you need to disclose the PAI for your whole balance sheet. How you get this data is your problem as an LP. You can do it via EETs, you can do it with something else, you can type manually all the data into your database. It's completely up to you how you do it. EET is an industry tool to facilitate this process. If you use it or not, it's up to you, right? It is a bit like if you build a house, you would probably buy some tools. But you can say, I don't build it with those tools, I do it with other tools, I just do it with my bare hands, you know, or with something else. So it's just a tool which is free available and you can use, but you can also use another tool. So now let's say you use this tool and you want to do the EET quality level here. So you want to do an EET, and we basically distinguish between 6 quality levels from a PAI, so from a PAI investor perspective. And basically, you see here we have quality and effort, because more quality requires more effort. And if you don't do anything, you have no quality and no effort. But also, even if you provide certain basic data like general fund data, Article 8-9 data, exclusions, PAI consideration, yes, no, this is also, we would say, for a PAI investor, 0 quality. Why? Because there's no PAI values, no PAI coverage ratios, no PAI eligibility ratios. So this here is exactly the same as no EET. There is no data you can use for anything. So the first level, the first quality level would be providing with PAI eligibility ratios, because it would already show that you can, so which percentage of asset allocation should report investee companies, real estate, supranational. The second level, if you want to improve it a little bit, will be to provide at least some PAI values and also coverage ratios. Not all, but some. If you manage to provide all mandatory PAI coverage ratios in the same way as eligibility, so if you calculate PAIs for all your assets, then we would say it's a level 3, which means that you basically fulfill all mandatory PAI reporting without any data gaps. If you also do additional ones, it will be 4, and if you then add on sustainable investment taxonomy, it's a nice to have add-on for a PAI investor in case they want to do Article 8-9 products or something else. But the majority, let's say, of PAI happens between 1 and 4. So as you can see here, you can already improve significantly by just providing some values, so some eligibility ratios, and even maybe some PAI values, the simple ones. So how does it look like? The starting point, this is step-by-step improvement that we've seen also already from a couple of GPs with whom we engage. So they will start with PAI eligibility ratios, and the beauty of it is it's simple to calculate. You don't need much, and you basically provide. There are 3 main eligibility ratios. They're the same across all fields, so the same value you need to use many times, which is also a drawback of the EET because it has very repetitive data points, unfortunately. But if you calculate the eligibility ratios for investee companies, real estate, supranational, you will already basically have a good starting point for the PAI investor. One example here is a specific one. So those are like subgroups of the investee company. So they will have, each of them will have a different eligibility ratio. But the majority of KPIs here, there are only 9 of them. So, but the majority, like the other around 100. They are basically easy to calculate. Then if you want to get to 2, you can still do calculate at least some easy PAIs. Even if you provide even just 1 PAI for 1 asset with a low coverage ratio, it's still better than nothing. So it already closes the data gap. It's already better. So what are the typical easy PAIs, let's call them? The typical easy ones are controversial weapons. Most of GPs can provide it because it's part of the exclusions. Companies producing chemicals, sometimes not even part of the strategy, so no. Severe human rights issues would usually be part of some due diligence or monitoring. So this is something what usually can be provided without too much effort. And for real estate, we see real estate assets involved in fossil fuels. So usually you would know if you now have some sort of a coal real estate you're financing, coal storage you're financing or not. So if you just do some of those KPIs, you'll already improve significantly in the quality without having too much effort. And then, of course, if you want to do more, then you need to move on and obviously calculate other PAI values, which are maybe more difficult to calculate, increase your coverage ratios, and then maybe move on to taxonomy alignment and sustainable investment. So that is our, let's say, step-by-step suggestion of improving over time. And again, you can reach the level of 2 with not too much effort and almost without any ESG data. So for 1, you don't need any ESG data. For 2, you already need some simple data that probably you'll have even if you don't have a clear process for doing this. So I will skip due to the in the interest of time. I'll skip the following slides. You can review them, so you'll get the slides. So here we had a couple of typical issues that we see either in the calculation of PAIs, where there are many mistakes, but also in the EET itself. The biggest point that I would like to point out is that the definition or the interpretation of zero and empty is a very big issue. So if you write zero something, it means, let's say you say scope 1 is, scope 1 emissions are 0, it means that you don't have any scope 1 emissions. So don't write 0 if you think that you don't know which type of scope 1 emissions you have, right? Because then it will be greenwashing, because you suggest that you have no scope 1 emissions, but then actually you do. You just populated it incorrectly. So many details. I think the whole our whole, let's say, summary of this whole EET calculation validation process is the devil is in the detail. This is for sure. Okay, so you can review the typical, let's say, lessons learned here separately. And now I would move on to LP, unless we still have anything, Michael, from your end.
Well, we could pick up this question here. As all information requested in the EET is already covered in the SFDR PAI reporting we make available to our LPs, EET seems an extra burden where we have to repeat that information we already provided. What is the additional added value compared to the SFDR PAI reports?
Great question. So 2 things. One is Article 7 does not require you legally to provide coverage and eligibility ratios, which makes it difficult then to populate. Point number 2 is from the process perspective, it's much easier to aggregate an Excel or CSV template and validate it than to use a PDF and then somehow extract data from that. Those are the 2 main reasons. So one is EET has data from the practical operational perspective that you will not have an Article 7 template, and 2 is you can use it in a machine readable way on the LP side, as opposed to the GPU template. Okay. Yeah.
Thank you. Then just a question to a slide before, how the additional PAI should be reported. Should the ones that were not chosen be reported in the example you showed before? It is no value reported and coverage and eligibility with 0.
If you have no PAI, then the value would be empty. The coverage would be 0. The eligibility, it depends if the asset is eligible or not for the PAI. So eligible means you should have reported it. If you should have reported it, the eligibility would be higher than 0. If it's something for which the PAI is not relevant for, the eligibility would be 0. So the eligibility has nothing to do with the reporting itself. It just has to do something with, are you supposed to report something? Yes or no? Is it an investee company? Then the eligibility increase. Is it not? Then the eligibility of the investee companies is 0. All right, so now let's have a quick look at the LP. And by the way, keep asking questions if we don't manage to answer all of them. So I'll also stay. I can stay also later here. We'll review them after the webinar and give you a one-on-one feedback. So LP perspective. LP perspective is the same. The difference with the LP is that the LP now receives not just the direct asset data, but the LP receives now the EETs. So and not just EETs as we said before, but also Article 7 templates and quarterly reports, and so on and so forth. So the LP has now let's say, the challenge to aggregate, validate all this data, provide feedback on it, engage with the data source or the target fund manager, and so on. So now what we've already heard before, the LP has multiple data sources. One is the EET. Another one is the LP could come with their own template. So they could come and say, here is my template, or a template of a commercial service provider, you can use it. Or it uses what the GP already provides. It could be an ESG report, or it could be what we've just heard, Article 7, 8, 9, maybe disclosure templates. Each of them has advantages, disadvantages. I'll skip this slide. I think it's self-explanatory here. I think the two big reasons for the EET is you can use it for all funds and not like Article 7, 8, 9 just for certain funds. It is the market standard, so it's easier to get the acceptance for this rather than for an individual template or for limited usage ones. And you can do automatic processing. So I think those are the two main advantages as opposed to the other data sources from the LP perspective. Now let's say we now do the EET. So what will happen usually on the LP side? So the LP will try to negotiate a side letter. For existing funds, it's too late. So then it will then request, regardless of the side letter, the EET and say, those are the fields I need, and this is the data I need by. What then will happen is that either there is a no, and then the GP, if LP receives a no, they'll engage. They'll send a reminder. They'll try to have a call. We would usually discuss it and say, this is how you need to populate. It's not that difficult, and so on. And some of them will be a yes because you engage with them. So a no can become a yes, and we saw it actually quite a lot after GPs all of a sudden understood that actually it is doable, at least to a certain extent. And then any EET received needs to be obviously validated, because especially in the first year, many things are wrong. Many things are inconsistent, are wrong, so they need to be validated. They need to be deleted if they're wrong, because otherwise you have data garbage in your data later. And you need to engage for improvement. So just using wrong data and deleting them, you also need to tell the GP, this is what you should maybe do better next time, and improve. And some GPs are also very happy about the feedback, because they obviously want to improve this EET and give it to many different LPs. So they're also interested in having a good EET. Then what the LP will do, it will aggregate it, maybe populate certain data gaps conservatively, but also provide estimates and analysis. And then it all goes in the statement, into the PAI statement. So what would usually happen if there is no data? If there is no data, then the LP would often have to make conservative estimates. And the conservative estimate would be that all eligibility ratios are 100%, because the LP doesn't know what is in the fund. It assumes that the fund has everything. So everything should have been reported. And that will be the worst case. Coverage is 0, PAI values are empty, and taxonomy and so on is also 0. So this would be the worst case assumption, let's say, for the aggregation. And this would be also then the maximum possible data gap that would be disclosed on the website, which is obviously not the goal. And therefore, in order to just reduce this 100% assumption, a simple EET with PAI eligibility ratios only will also help reducing it. So just reporting eligibility ratios consistently would already be a good help, even if you don't report anything else. Now, what happens if the GP does provide an EET? If you provide an EET, then the EET is quite a big template, and many things can be wrong. The format can be wrong, then certain data may be missing, and also certain things can be inconsistent. So, for example, you have different eligibility ratios within the same category. It's not consistent. And as you can see, so when we do this, we have almost 2,000 checks here between all possible fields and all possible ways. And this can be performed automatically. This is also the beauty of the EET. You can automatically validate it. However, a big point, which I think would become a big one in the future, is the content. Because one thing is, let's say, the technical correctness and consistency, but the other thing is, was it actually calculated in the correct way? So were 4 quarters used? Were the GHG emissions calculated correctly, and so on? And this is obviously something what you can't see from the EET, because EET is flat. It's just like numbers. You don't see anything about the methodology. So The DDQ on the methodology, I think no LP, we don't know any LP that performed an operational due diligence on the PAI methodology of the GP. I think it will become important because otherwise you get data, you just accept it, you don't know what exactly you're getting there. So you would need to review the PAI methodology, the PAI calculation methodology, and to agree with this before you start accepting it. I think right now everyone accepts everything what they just get. But obviously there will be also a lot of mistakes in terms of content, and in order to find out those mistakes, a significantly more effort would have to be made to analyze the content and also if it's correct. So same as if you analyze how the fair market values are corrected for level 3 assets, you know, so or how risk management is performed or how portfolio management is performed. I assume at some point in the same way, the operational due diligence on the fund level will also include the assessment of the PAI methodology. And then whatever is wrong has to be deleted because otherwise you'll have, like I said, data garbage. And then what will at the end happen are data gaps. You can't avoid data gaps, they'll always happen. And then we've already spoken about it. You have two ways. One is you disclose, so you say I have 10 tons, I calculated for 50%, and I should have calculated for 70, so I have a data gap of 20. And this is why you need eligibility and coverage ratios. Another is you basically out of 10, you make now 14. So what the LP did is they scaled up the 10 to 14 with some methodology. So they don't report 10, they report more, 14. But then they also disclose that 20% were estimated based on some methodology. And there are many methods to do it, from a simple linear scaling, where you also need eligibility and coverage ratios, to peer group average, peer group worst case, and whatever. So it's just a peer grouping and benchmarking, let's say. And it's just important that whatever you do, you disclose it. So this is, I think, is the whole point of the PAI statement. And last but not least, what can be done is you can analyze all the EETs you received. So you could have a look and see that certain target funds you see here reported, like this one reported 15, this one hasn't reported anything. You can compare their coverage, eligibility ratios. So you can also benchmark different funds against each other. And also, obviously, use it for also maybe future investments, because you know that you have some better ones and some worse ones. And some LPs already know it's easier to get data from better ones. So maybe we'll look at this more in the future fundraising process. The same is the analysis can be then made also on the fund-of-fund level or the LP level. They can see what is the eligibility ratio, how many PAIs were reported, how many should have been reported, what was the coverage, and so on. And basically can be then analyzed in terms of also comparing, like I said, you can compare different funds. So you see here, this one reported 15, this one reported 2. This one had a maximum coverage of 92 out of eligibility of 98. This one was conservatively estimated with eligibility of 100, but had a coverage of 0, and so on. So EETs are not just live in the now, you can also use them for cross comparisons between target funds. And that leads me to my, so here, same story basically. And that leads me to my last slide, on time, just on time. Finally, we have the PAI statement. So all this, what we've discussed today, will then lead to a PAI statement. And we're saying here, happy PAIs reading after the 30th of June, because you can go on any website of the Article 4 investor and they'll have to disclose it. So you can download a couple of them and just read what they disclose there. And it's going to be a very interesting read. So we're very excited about it for the next, for July. It will be a good July read, our reading recommendation for July, PAIs on websites. That from my side. And now, Michael, I'm definitely open for a couple of questions if we still have time.
Well, we almost picked up nearly every question, but I will start with a big thank you. So thank you for this seminar and the demystifying of a lot of little devils in all these details. So just for you. Then another question is, do you recommend a software to facilitate collection and production of EET reports?
No, so I do not.
Okay, then when will be the first mandatory reporting on PAIs by LP? So well, it's the end of next month.
In 1 month, 30th of June,
in 1 month.
the very latest of this year.
So if you are going to develop a software, I rather don't think so, but
we have our own software, but obviously we're doing an educational webinar here, so we're not recommending anything.
So then is a question, can GPs decide to only provide raw PAI data from underlying investments and not aggregated data?
Yes, they can. However, they will have to, so GPs can decide to do it from underlying assets, absolutely. They will have to perform then multiple aggregations on multiple levels, which may make it more difficult. Does it work? Yes, but will it be more work for the for the manager and scope? Yes, so it will be much more effort probably. Because you're further away from the asset, so it's more difficult to get this data, to validate this data, and then you also need to calculate and aggregate more. So we think that it's process-wise, it's easier to leave the work with those who are responsible for the direct asset. So the fund of fund is responsible for the target fund, so they should get the data from the target fund. The target fund is responsible for the direct asset, so they should get the data from the direct asset. The direct asset has their service provider, so they should get the data from their service provider, and so on.
Well, with regard to the time, there are some small questions regarding the beginning of this webinar, so I suggest we will pick them up after the webinar. There is no open question with a big issue or topic, so I think let's stop here. Jegor, many thanks also from our side to your presentation, for your slides, for your accurate answering of this question. If you are interested, we have also a webinar next week on insurance-related topics. You will find all information on our homepage. As I had said at the beginning of this webinar, you will get an email with links to the slides and to the recording, so that you might catch it up again and watch it on demand. So if there is no further question or no further remark from your side, Jegor, that's fine for today.
Many thanks for the webinar. A lot of questions, a lot of interaction. It was great fun and hopefully helpful for you as well. Any questions, let us know, message us, write us an email, reach out. And also for the BAI working group, any feedback regarding the EET is appreciated, because then we can collate it and provide you the indirects. Thank you very much. Have a great week and see you very soon. Bye-bye.
Thank you very much. Have a sunny day. Bye-bye.